Welcome back to the Ring of Knowledge, your trusted source of practical financial knowledge. Today's video will discuss Bitcoin, the digital cryptocurrency you need to know. Are you ready to embark on an adventure into the cutting-edge world of cryptocurrency? Join us on a thrilling journey as we uncover the mysterious world of Bitcoin, the revolutionary digital currency shaking up the financial industry and changing the way we think about money forever. Look no further because we're about to take you on a journey into the fascinating realm of Bitcoin, the world's first decentralized digital currency. Bitcoin is a topic that will pique the interest of tech enthusiasts and finance experts alike. Whether you're a complete beginner or a seasoned pro, our comprehensive guide will give you everything you need to know to understand this revolutionary technology and how it's shaping the future of finance. So grab your virtual wallets and let's dive in. What is Bitcoin? Bitcoin is a digital currency that doesn't have a central bank or government watching over it. Instead, it uses peer-to-peer software and encryption to share information. All Bitcoin transactions are written down in a public ledger, and copies are kept on servers worldwide. A node server can be created on any spare computer. Instead of relying on a central source of trust like a bank, these nodes use cryptography to agree on who owns which coins. Every transaction is shared between the nodes on the network and made public. About every 10 minutes, miners collect these transactions into a group called a block and add it to the blockchain. This is the official book of accounts for Bitcoin. Like any other asset, Bitcoin can be traded for cash. People can do this at online cryptocurrency exchanges, but transactions can happen in person or over any communication platform. This means that even small businesses can accept Bitcoin. Bitcoin doesn't have an official way to change into another currency. People made Bitcoin so they could send money over the internet. The goal of digital currency was to give people an alternative way to pay that didn't depend on a central authority, but could be used just like traditional money. How does Bitcoin work? Bitcoins are digital assets that can be kept in a Bitcoin wallet or traded for other cryptocurrencies at a Bitcoin exchange. Each coin is worth the price of Bitcoin, but you can also own a part of each coin. The smallest amount of Bitcoin is called a Satoshi, the name of the person who made Bitcoin. Since one Satoshi is equal to 100 millionth of a Bitcoin, it is common to own fractional shares of Bitcoin. Blockchain. Bitcoin is powered by a piece of open source code called a blockchain. This code creates a shared public history of transactions by putting them into blocks that are chained together so they can't be changed. This technology makes a permanent transaction record, so everyone who uses Bitcoin knows who owns what. Bitcoin mining. People on the Bitcoin network use a process called mining to ensure that new transactions are the same as other transactions that have been done in the past. This ensures you can only spend a Bitcoin you have or have already used. Private and public keys. A Bitcoin wallet has public and private keys. Together, they let the owner start transactions and digitally sign them. This makes it possible to use Bitcoin's main feature to transfer ownership from one user to another safely. How does Bitcoin mining work? Mining is a procedure that ensures the continued operation of the Bitcoin network and also produces brand new currencies. Miners group big collections of transactions into blocks by completing a cryptographic calculation that is extremely difficult to make but very easy to verify. All transactions are made publicly broadcast on the network. The first miner to successfully solve the next block will broadcast the solution to the network, and if it is verified as accurate, it will be added to the blockchain. The miner in question will subsequently receive a reward from newly minted Bitcoin. A hard cap of 21 million coins is built into the software that underpins Bitcoin. There will never be any more than that exists in the world. The total quantity of coins that will have been produced will be in circulation. The difficulty of mining Bitcoin is increased approximately every 4 years by software, and the rewards for successful mining are cut in half. At the time Bitcoin was first introduced, it was feasible to mine a coin using even the most fundamental of computing devices fairly immediately. It now requires rooms full of powerful equipment, sometimes high-end graphics cards adept at crunching through the computations. This combined with unpredictable Bitcoin price can often make mining more expensive than it is worth. Miners also choose which transactions to group into a block. Thus, as an incentive, senders can include fees of varied amounts in their transaction. After all of the coins have been mined, continuing these fees will serve as an incentive for mining to proceed. Because it is what makes up the infrastructure of the Bitcoin network, this is essential. Bitcoin price history. At the beginning of 2011, 2011, one Bitcoin was worth 30 cents. At the beginning of 2017, one Bitcoin was equivalent to $998. It was close to $20,000 by the winter of 2020. By April 2021, the cost of one Bitcoin will have risen to $60,000 USD. After hitting a low of $30,000 in July, the price rebounded to reach $50,000 by the beginning of September. After that, on November 10th, the price of Bitcoin reached a new all-time high of $68,789.63, according to CoinMarketCap. On January 24, 2022, the price of one Bitcoin reached an intraday low of $33,184.06 after being in a bear market for a significant amount of time, which resulted in the loss of a sizable portion of its value. Despite this, there has been a significant increase in price since then, and at the beginning of April 2022, Bitcoin is trading for $46,513.69. The price swings of the cryptocurrency that holds the title largest in the world have been nothing short of a roller coaster ride over the last 10 years. It is unfathomable to think that in May of 2010, one complete Bitcoin could be purchased for a fraction of a cent. In the early days, some people made a significant amount of money. Take a look at Cameron and Tyler Winklevoss, for example. The twins filed a lawsuit against Mark Zuckerberg in the early 2010s and settled in the neighborhood of $65 million. They licked their wounds and put $11 million of the cash into Bitcoin in 2013, when the price of Bitcoin was trading at $120. After another 4 years, the value of their Bitcoins had increased by more than 10,000%, and each coin was approaching $11,000. This resulted in them becoming millionaires. Laszlo Hayek, who will now be remembered for all time as the Bitcoin pizza guy, is one individual who is attempting to put on a brave face despite the circumstances. In May of 2010, he shelled out 10,000 Bitcoin to purchase 2 pizzas from Papa John's to demonstrate that Bitcoin can be used to make everyday purchases. At the time, one Bitcoin was not worth nearly as much as it is now, but at the time of this writing, one Bitcoin was approximately worth $46,000. He shelled out a staggering $460 billion for just 2 pizzas. Ouch! Hayek continues to insist that he does not have any regrets about it. How to use Bitcoin. Even though it was made more than a decade ago, Bitcoin is still the most popular digital currency. The New York Digital Investment Group found that 46 million Americans own Bitcoin, or about 22% of the adult population. But it would help if you learned a lot before you can start investing in Bitcoin. Choosing a Bitcoin wallet. To invest in Bitcoin, you must find a cryptocurrency wallet. You don't put your Bitcoin in your cryptocurrency wallet as you do with a traditional money. Instead, your wallet is tools where you keep the private keys you need to get your cryptocurrency on the blockchain. You can use either a hot or cold wallet to store your cryptocurrency. Hot wallets. A hot wallet is online or connected to the internet. You can find hot wallets on websites or in apps for mobile devices. With a hot wallet, you can easily access your cryptocurrency using your phone or other devices. But because hot wallets are online, they are easier to hack. Cold wallet. A cold wallet is a way to store your Bitcoin keys offline, usually in a separate piece of hardware. People think that cold wallets are safer because they can't be hacked. If you lose your hardware, you might also lose access to your Bitcoin. How to buy Bitcoin. Bitcoin dominates the cryptocurrency market in terms of value. Falling cryptocurrency and stock market prices may present an opportunity for those prepared to take on the associated risks. Here's how you can get it. Choose an exchange. You can wait to buy Bitcoin through your bank or investment firm, but some groups are working to make that possible. For now, if you want to trade US dollars for Bitcoin, you'll have to use a cryptocurrency trading platform. There are a lot of places online where you can buy cryptocurrency, but Coinbase, Gemini, and Kraken are some of the most popular. On these online exchanges, you can buy and sell cryptocurrencies. Fund your account. Depending on your exchange, you may need to give information like your social security number, ID, and source of income when you create your account. Most exchanges will let you link your bank account or debit card so that you can move US dollars into your exchange account. You may have to pay different fees depending on how you fund your account. Usually, bank transfers cost less than card options. Place an order. Once you've linked a payment method, you can place your Bitcoin order. Depending on which exchange you use, this process can be different. Bitcoin is typically purchased at the current rate by entering the desired amount in US dollars on a platform like Coinbase or PayPal. If you use an exchange like Coinbase Pro, which is made for more active trading, you can place market and limit orders. With a market order, you can buy the cryptocurrency at the current market price at that moment. With a limit order, you tell the exchange what price you will pay for the cryptocurrency. Once the currency gets to that point, it will be bought on its own. Practice safe storage. Many exchanges let you leave your investment in your account, which is easiest for most people just starting. But you can move your digital assets into a cryptocurrency wallet if you want to protect them even more. A cryptocurrency wallet is a way to store digital currency. There are different kinds of cryptocurrency wallets, and each one has its level of security. The exchange you use may have a wallet option, so you can easily move your coins from your exchange account to a more secure wallet. You can also use software from a third party or cold storage on an offline device. How to invest in Bitcoin. It is important to figure out the best place for you to invest in Bitcoin. Some platforms are better for beginners who want to learn how to get into crypto, while others are better for big investors who want high-level trading tools. Here are some Bitcoin brokers to consider if you're interested in making a Bitcoin investment. eToro. We used eToro as an example broker, partly because this is the best place to invest in Bitcoin and buy cryptocurrency as a whole. Simply put, eToro lets you open a verified account in minutes, and all you need to invest safely and securely in Bitcoin is $10. Webull. When utilizing an online broker like Webull, investing in Bitcoin does not necessitate a hefty initial investment. Not only can you register an account on the user-friendly platform without making a minimum deposit, but you can also invest in Bitcoin for as little as $1. Binance. The Binance US platform permits Americans to invest in Bitcoin and more than 60 other supported cryptocurrencies. As such, this is an excellent choice if you intend to diversify your portfolio of digital currencies. Coinbase. Coinbase is the next broker to consider if you want to buy Bitcoin. Tens of millions of clients now use this cryptocurrency broker, many of whom are in the US. It is listed on the NASDAQ. The platform is great for beginners because it makes investing in Bitcoin and dozens of other cryptocurrencies easy and safe. Risks of investing in Bitcoin. Bitcoin is volatile because any government or central bank does not regulate it. You can't file a claim or complaint if you lose your Bitcoin investment. In the end, you'll lose all of your hard-earned money for good. Also, some people have done illegal things with Bitcoin. Bitcoin is a volatile digital asset because its value goes down and up a lot. That means you can put a lot of money into this virtual currency and lose it in just a few hours. Bitcoin can be used as money and as a good. That means the government can tax Bitcoin just like any other commodity. But because it needs to be centralized, it's hard to tax. And because it's new, people have yet to learn what will happen to it. Should you buy Bitcoin? Is Bitcoin a good investment? It all depends on how much risk you are willing to take, how you plan to invest, and your financial goals. Before investing in Bitcoin, you should think carefully about your goals and what you want to get out of your investment activities. Do you want to earn money without doing anything? Become a full-time investor? Save for retirement? Getting answers to these questions will help you decide if Bitcoin is a good investment for you. Bitcoin is a volatile asset, which makes it a very high-risk investment. This means that Bitcoin's value can change significantly in a short amount of time, even in just a few hours or days. Bitcoin, like all other cryptocurrencies, has no value on its own. It's not backed by a physical asset like gold or silver, and there's no one in charge of ensuring its value stays stable. Also, the value of Bitcoin isn't tied to the profits of any particular company. How much Bitcoin is worth depends on how much people want it. The value of Bitcoin will go up as more people buy it. Value of Bitcoin will go down when fewer people buy it. If you want to make a lot of money with Bitcoin, you may need to time the market, which is a hard and usually bad investment. Still, there is a chance to make money. So that's all for today's video. If you like this video, click the like and the bell buttons. We'll have another video for you soon. Take care until then.